Do we have a supply overhang where we're building out and hoping it'll come? No, the answer is absolutely not. We do not have a supply overhang. We have a supply underhang. The demand is very real. My true belief is it's all undervalued in the long term. This stuff is so disruptive. Demand is so real. It's monetizing so well.
I think I did my 50th TV segment this week where I got asked the question, are we in an AI bubble? I'm so tired of answering it. You know, my comms guy said to me, you can't laugh at them when they ask you this because you make it look like they're asking a stupid question.
I feel the same way.
Founder and CEO of More Insights and Strategy, Patrick Moorhead.
6, 5.
CEO of the Futurum Group,
Daniel Newman.
6, 5. Do we know what we're talking about, Moorhead?
We absolutely know what we're talking about. Bestie!
Hey everyone, welcome back. We are back. We are so back. Episode 289, back and at it here in 2026, Pat. Gosh, another year just blew by. And you and I lazily skiing away and beaching away took 2-3 weeks off. Now, the industry didn't take 2 or 3 weeks off.
Sure.
There was really no downtime, including a mega deal made right on Christmas Eve. That $20 billion NVIDIA Grok deal. So there's no downtime. But you know what, Pat? Everyone, even us, needs a little bit of a recharge. And so, how are you, man? You're back. Give me the quick stats, the vitals. You're healthy. You've got any big news in the family you want to break? Did anything interesting happen in the Moorhead clan over the holiday?
Maybe. Yeah, my daughter Catherine got engaged, and Lauren is already married, and I've got a grandson. We have his birthday party coming up in February, and then kind of on the health front, the shoulder's doing well. And I'm kind of balancing, muscle mass and energy with fat. I'd like to lose, 5 pounds of fat to get my content down, but I don't want to lose energy, so I can't blast it on the strength training workouts. I've been really happy about that. But all systems are a go. I mean, shoulder, hernia repair, dude. I have no excuses at this point whatsoever.
Yeah, and you're a miserable son of a bitch when you are hurt. So I'm going to keep you healthy this year because you're almost intolerable when you're not able to get after it. So we're going to work extra hard,
folks.
We're going to work extra hard to keep you healthy and rich this year because that's when Pat's really the best to be around. But yeah, I'm really glad to hear. Yeah, mine was good. I mean, I did survive being stranded in Aruba. There's just no way as a pompous, privileged individual to say that and not sound like a total moron. So let's just say I was in Aruba, 20 miles or less from the border of Venezuela the day the airspace got shut down, and I was trying to get back. It did actually impact a number of different things, but I was trying to get back for CES, and it was kind of like a stressful way to end some good downtime just because I had to be at an event because, gosh, I mean, why not start the year off with the first Monday having one of the largest technology events in the world? But Pat, off we went. We made it. I made it. We went to Vegas. You and I did the pregame for this mega Lenovo Tech World event where pretty much the keynote had and their CEO, YY, and NVIDIA CEO, and it had AMD CEO, Qualcomm CEO, and, just the who's who of tech was on the stage. And you and I were pregaming, and we did that, and we were busting through. So we came in, I think, I don't know, 16 videos. I think we did 16 videos in less than 24 hours of actual time. And we crushed it. So that's good. So we crushed the year. We crushed the first week. We're getting after it. And we got a great episode for everybody. So, first of all, great to be back with you all. Thank you all for being part of our community. We really do love all of you. And, the fact that you spend some time with us each week means a lot. We're going to have a busy few weeks ahead. We are going off to Davos, Pat. We're going to have you and I are going to be, in a view from Davos. Once again, there'll be a number of conversations, sit down, and just some great meetings that we expect to have while we're there. And there was just a ton to cover this week because of CES, but not just CES. There's more AI news, unsurprisingly. And by the way, The C in CES maybe should stand for chips now. It's maybe not consumers. It might be the chip show. And there's a lot going on there. And Pat, we're going to have to be a little bit quicker today in our Decode and Bulls and Bears because we have a very exciting guest for our off the record section. So we're going to have to be a little cautious about how much we drone, just knowing the time we have to record. You and I got other meetings. I don't know if you guys believe this, but this isn't the only thing we do. I know we're really good at it, but we actually do a whole bunch of other stuff in between. So I don't know, man. You ready to get after it? You ready to just dive into the week's docket?
LFG, Daniel.
Let's go to the Decode. All right, my man. It was the chip show. Let's just do the quick rundown. I mean, I think the big day one, day zero was NVIDIA. I mean, there was some other big chip news. And I think we should touch on that too. But like NVIDIA, Jensen, Keynote, packed event, millions of eyes. What happened there?
Yeah, so just to net this out, it was all about Vera Rubin shipping and open sourcing an auto generative AI agentic platform for automotive called Alpa Mayo. There was more details about Rubin being in a 6-chip platform, which it's funny, it might actually be 7. He mentioned something on Bloomberg about another chip that I thought was interesting. Maybe that was CPX, but Vera Rubin had been announced already. There were just more details that went into that. But again, shipping it and again, it wasn't shipping it for production. I believe it was first ship of units for people to test, because I don't believe that it's going to be fully online until the second half of this year. And then the follow on to that is Rubin Ultra. So I mean, it was part of Jensen's rock show. He took it from Washington, D.C. here to Las Vegas. He came out from a timing standpoint second after Qualcomm, but NVIDIA is just being NVIDIA, and they literally sucked a lot of oxygen out of that room.
Yeah, it was. And I think you that was a way to take about 4 days of content and take it into about a minute. I mean, look, I think the full production was the big thing. I think a lot of people expected that moment to maybe come at GTC, not necessarily to happen at CES. Seemed like there was a bit of a tug of war. I think Lisa, Sue, and AMD are running their own race for sure, but they want to make early announcements. And I also think there was, Pat, if I can just say, like, if you do the Chip Enterprise show, because Enterprise was super in focus, and both Enterprise in terms of delivering data centers that enterprises can touch and get access to, Pat, but also Enterprise in terms of special parts for enterprises, like, right? I mean, MI440X, which is like, we're saying, hey, enterprises might build data centers too, and they're not going to have liquid cooling, and they're not going to be able to bring in gigawatts of power, but they're still going to want to be able to do inference and AI. And so, Pat, I don't know. I think for guys like you and me, though, like, I think it's fun that CES is starting to be tailored more to stuff we care about.
Yeah, and it's funny, a lot of debate on that. Obviously, the gaming guys are upset. CES changed its name to CES from the Consumer Electronics Show a couple years ago, and it became the Automotive Show about 5 years ago. It's really where is all the money and excitement happening show, right? That is what this is about. But listen, I'm here for all forms of news, whether it's robotics, data centers, cool stuff in automotive, things that move innovation forward and help out consumer businesses.
All right, a bunch more CES related stuff. We'll hit that later down in the docket, Pat. Just a quick note, I don't know if the energizing the data center was a pretty big topic throughout the week. We make jokes about the size of the racks and the amount of gigawatts of power they're going to take, but Meta is now signing, some new nuclear deals. So I said 25 was the year of these GPU REITs. You had companies like Iron and Cypher, and you had capacity plays like Nebius and CoreWeave signing all these deals with hyperscalers because they need more capacity quickly. It seems like now they're looking further into the future because, let's face it, most of these nuclear technologies are not shipping at this point. Some of them late into the decade, some of them not in much further. But Meta is basically saying they got about 6.6 gigawatts of power they need to add by 2035. So they're starting to think ahead of this stuff, Pat, and they're signing deals with Vistra, TerraPower, and Oklo to basically help them get the capacity that they're going to need. So we're starting to get this forward pull, as forward inertia of, okay, the turbine power is not going to happen fast enough to get us to where we need. We need to start thinking well into the future, Pat, and now nuclear's hot.
Yeah, that's right. I mean, it's you've got power requirements in the front of your face, and current course and speed, we run out of power in 2028, and I've been pretty clear. We've got a 2-year fuse unless we have some sort of a Manhattan Project style launch on nuclear. You're advising some companies. I'm meeting. Have had ongoing conversations with fusion companies. A very renowned investor here in Austin has been in that for 3 years, and none of this is new. I mean, AWS last year, I think mid-year, in 1 week, nuclear became okay again, and then AWS talked about what it was doing. Each one of the hyperscalers have outlined a power strategy because they do see that as the gating factor to accomplish what they need to accomplish.
Yeah, absolutely. And I expect this to be the year of hearing more deals by more hyperscalers signed with more prospective nuclear providers, meaning there's still risk here that this stuff ever comes online. I'm pretty sure Oklo hasn't deployed any gigawatts yet. At this point, they have contracts and deals. So these are very speculative, but the technology is starting to prove out. And as it proves out and starts to get deployed, there will be a lot of interest in working with these companies. And I think we're going to see some interest back, Pat. And, we heard about, what was it, like 3 Mile Island reopening? Like, I think you're going to see more interest in fission, not just SMR, but fission, like reopening and accessing some of the nuclear capacity that was available that for really no good reason was taken offline when it was politically correct to do so. All right. So, Pat, we also need to touch base on AMD. I know I teased it a bit. It's hard to talk about AMD without NVIDIA and NVIDIA without AMD. But you spent some time with Lisa, and we spent some time with AMD. Like, what was your read on that?
Yeah, and very similarly to NVIDIA, you had AMD giving more information about its racks and its technologies. There was a little bit of a, of course, there's going to be an MI 500 coming out. There was a little bit of discussion about that. Probably one of the biggest breakthroughs or kind of news was that the company was in robotics and space. Now, apparently, they had been in space for a long time, primarily through the Xilinx acquisition. You had NASA, you had a lot of other folks up there, but they did talk about what they're doing next in that area. But it was the robot on stage that I think got everybody excited, and because nobody had really heard of AMD in robotics. A pretty cool company. I think it was called genetic engineering. I forget the name, to be honest, but I wish that the robot had moved, like walked or something like that, to show some reality. But there were some incredible, cool tricks that they did. So one of the things that I thought was really unique about AMD is getting Greg Brockman on stage to talk about why he chose AMD. And I know Brockman gets on a lot of stages, but he literally he showed the slide, which he created in ChatGPT, on exactly why they did it, and whether it was for scale-up domain, decode, and prefill. This is why they were going with AMD. It doesn't mean they're not going with NVIDIA. They are, but it was good to see that as a vote of confidence, because it was one thing, AMD stock skyrocketed when the announcement was made, but to have more details on why they did that. The only thing I'll end with here is, so Lisa is has a very high say do ratio, and she doesn't use biggest, fastest only, without there being some data there. And she said Helios, the world's best AI rack. And I know the word best can be construed in multiple ways, but I feel that as a sign of confidence that AMD has around Helios. And while they didn't say they were shipping it, like NVIDIA said they were shipping theirs, that's about as close as you can get to it, with the affirmation from Greg Brockman from OpenAI.
Yeah, we see their Helios business driving somewhere around 8 to 10 times growth in their AI accelerator business over the next couple of years. So it's going to be really big for them. I mean, look, they're always going to be fighting just based on pure size, the NVIDIA headwind. Probably the biggest questions they still have to answer is ROCm. Can they execute and build that sort of contingent around it? They've made a lot of progress. But Pat, we talk about this on the show all the time. The demand for AI is favorable. Lisa has wafers, capacity, customers, and they're going to use AMD.
Yeah.
And I think those that want to zero sum this thing are just wrong.
Yeah.
They are going to use it. It's going to find its way in with the hyperscalers. There's a lot of neo clouds building around it. Enterprises will build around it. It is going to be a battle to take share. But the market's so big that if it can just have the share it has, and grow with market, they will grow very, very large, be very, very successful, even if NVIDIA doesn't trip up. So that's just something important to point out. All right. For a long time, I've been banging the drum like, hey, Qualcomm is going to get into robotics. It just made sense. They've been kind of, there's a couple of things favorable, but they're very focused in low power. They're very focused on edge. They've been very focused on autonomy. And they had all the right ingredients for it. And they really kind of had their coming out moment here at CES. With the announcement, was it the IQ10? Is that what it is? Is that what it is? I'm trying to make sure I got the right name for it. And they are the Dragon Wing platform. But what they're basically doing is taking the autonomy platform from their ADAS, and they're applying a lot of the work that's been done. And by the way, those of you that are out there, like, Qualcomm has become a formidable company in automotive. That has been probably their biggest net new diversification success over the past half a decade. And now what they're really doing is saying, look, yeah, there's a an Optimus market for $30,000 per humanoid, but there's a huge market for other smaller, different form factors of humanoid robots. And I thought, Pat, and I think you've mentioned a few by name, but like Figure 8 is it, and like a number of other companies that had kind of sounded like they were going to go down the NVIDIA path, have made commitments and came out and made some commitments here at CES. Looking like Qualcomm may have their next kind of big market TAM expansion opportunity in this multi-year diversification play that they've had. So I thought this was really, really interesting, Pat. I mean, there was other announcements. They had more automotive announcements. They had more IoT, Dragon Wing related announcements. But I don't know about you, but their kind of full entrance into the robotics race was a real standout moment for me.
Yeah, when at their last financial analyst day, they had put up some numbers that go into 2029, and I was thinking about robotics. Like what would it take for people to get the attention in the outside world that Qualcomm would have to do this? And their first thing was, you have to show up with somebody, a major brand, right? Maybe whether it's Tesla Robotics, KUKA. And even, maybe one of NVIDIA's premier partners. And they did all that. Like KUKA is one of the biggest robotics companies on the planet, and they're in. NVIDIA and Figure AI have a very strategic relationship together. So I was quite shocked. I met their CEO on stage at GTC, and they're using, first of all, DGX on the back end, but things like Jetson and Thor for real time robotics. I think also, the Isaac platform. So seeing their name up there, what was a surprise. Then I started thinking, hey, what happened in the ADAS market and the dashboard market where, NVIDIA was the absolute, the only thing in town for both those markets. Qualcomm came in and really took over the dashboard. And then Qualcomm has been very successful with lining up ADAS. Are we seeing a very similar play here, Daniel, based on two things, which is performance per watt and openness of the software platform? NVIDIA does offer a lot of open source models from an entire stack standpoint in automotive. They brought out Alpamayo, but I'm unaware of NVIDIA's open source software platform for robotics. Doesn't mean it's not there. I'm just unaware of that. So Qualcomm's diversification plan is coming together. They've delivered in automotive. They're making a lot of headway in IoT. And then here we have robotics, the next $1 trillion opportunity for Qualcomm.
And there you have it. But there was a lot of benefit gained from the work they've done in autonomy for ADAS, and
For sure.
that is translating really nicely. And those wins were really material. We got one more Decode topic. We have about 20 we could do, but just going to have to keep you on schedule, Pat. You're a busy boy.
I'm just talking too much, Daniel.
You're just a busy boy.
Talking.
But I mean, good. What a week for Intel. Lip-Bu, Lutnick, Trump sending out tweets, or X posts, or I don't know what it is. But what do you have? What'd you hear? And what happened with Intel this week?
First off, the tweets by Trump and the video with Lutnick and Lip-Bu Tan, it was pretty awesome. And Intel did do a product launch with Panther Lake, but that's missing the macro point here. That's not why their stock is just exploding right now, because Panther Lake is a proof point around 18A. Intel gets 18A internal right, and they prove to people that gives them the right to do 18A and 18AP for foundry customers, which gives them permission to do 14A. So that was pretty amazing. The other thing that I thought was pretty cool is that this new architecture, typically what'll happen is Intel will do a waterfall. Like premium is the new stuff, and then down the price curve is the older stuff. But it's premium to mainstream laptops. I saw their lower positioned product in the lab actually running. It's not a science project. It looked like a very inexpensive design, which I think, to go up against the AMDs of the world and the Qualcomms of the world, I believe that these guys, Intel is getting ready to compete on price. That lower cost platform is called Wildcat Lake for all those out there and who are counting. And probably the third thing is, we saw these new Series 3 processors tested and certified for embedded and industrial, which could go into robotics, smart cities, automation, healthcare, and a lot more. So those are really the three standouts for me.
Yeah. So I'm going to just quickly say one is, great to see 18A on its own products being built and being successful. That will be a watermark, not the only one, but it will be one of the, they've always been able to do the IDM thing, but now they're going to try to start doing it for others. Pat, I do think there's wafer deals in tow. I just do. I got this sense of it. I think that there's a quiet confidence about Lip-Bu. He's clearly, and by the way, there's just so much demand. The demand is there, but I don't think it's going to happen on 18A. The Core Ultra stuff, very, very cool. So that was good. And like I said, it's up 10% today as we're doing this podcast, 10%. $45 a share. Most of the people that have, they're actually, if you had Intel for 10 years, you were maybe getting back to break even now. As crazy as that sounds, it's been a long time coming.
That's astonishing. Yeah, for the month, for the month they're up 12%. 6 months they're up 93%. And Pat,
and if you own NVIDIA in that same period of time, you were up. In the 10 years, you were up like 3,000%.
Yeah.
So they've got a long way to go, but it's good to see. We need American foundry. We need more foundry, even if it's not American. We need to just be able to make more than we're making right now. All right, Pat. Let's close out the Decode. Let's head over and talk a little bulls and bears. All right. The good news, Pat, is it's a quiet. No, there weren't earnings over the break. So in bulls and bears, we can just talk about a few macro things here. One is jobs reports came in. Basically, it was a Goldilocks jobs report. It was a little bit better than expected in terms of the unemployment rate, but the added new jobs was negligible.
Yeah.
And in the end, I think I'm just going to say this out loud because I'm a macro economist, self-proclaimed. I do think we do end up with more rate cuts this year. And I think that's going to be important for keeping the growth environment warm. I know Trump this week announced some things with housing. I don't know if you heard about it, like basically saying big corporations. So our friends at Blackstone aren't going to be able to buy up all the real estate and then overcharge rent for it anymore, potentially. And I know, Trump's steadfast about bringing interest rates down because that'll be what ends up stimulating that market. But that stuff all has tear down effects to the broader economy, to growth, to entrepreneurs, to investment. So it's always interesting to just talk about that stuff. There was something that came out this week that said, Pat, I don't know if you saw this. Do you know who the most profitable company was in the world last year?
I should know, but it was an oil company, Aramco.
No, Google.
Okay.
Google made more money. It's okay. We can delete that out or keep it. I don't care. But the bottom line is Google made the most money. And that, by the way, not just like profit, also cash.
Yeah.
In 27, though, Pat, it looks like Google's going to do it again this year, maybe. Although I think NVIDIA might change that trajectory this year. But in 27, it looks like NVIDIA is going to become the company's not only world's most valuable company, but also the company that creates the most profit in the world. That, of course, is unless there's a bubble, and then nobody needs NVIDIA anymore, and we go back to doing our workloads. What did we use? Like printing presses and sewing machines or whatever. So, anyways, so that was kind of interesting, Pat. They're apparently on their route to becoming, it could be a $7-8 trillion company. So only Elon Musk will be worth more than NVIDIA.
Yeah. For the record, for all the people who think I'm stupid, in 2024, Saudi Aramco had more net income than Google. I don't know what it was for 2025, but I think for 2025, you're probably right.
I don't think that was a dumb answer. I just think it was, what the hell? I didn't mean to make you look bad, buddy. I won't ever do that again. I'll never ask you a question without a prep again. Everybody out there, just know that if I ever ask Pat a question, he gets it wrong. It means I went off script.
Oh, I got it right for the wrong year.
It's okay. We're getting old.
Well, I hope my audience will forgive me.
But let's actually talk. Let's just quickly, Pat, because I don't think there's a lot of needing to dive into this. But Google was the most profitable company, and guess now it is apparently overtaken. So it went last year from being fifth most valuable company in the world when the year started. I think it was fifth, and it climbed past Amazon. It climbed past Meta. It climbed past
That's right. I mean,
past Microsoft. And now it's climbing past Apple.
That's
Alphabet
right.
is worth more than Apple.
One reason. It's called Gemini 3. Bard 1, disaster. Bard 2, disaster. Gemini 1, uninspiring. Gemini 3, hold on to your seat, folks, from a developer standpoint, from a usability standpoint. I mean, my gosh, I literally spent more time on Notebook LM doing those GIFs and summaries and than you can even imagine. So we didn't do a prediction show, Daniel, but it is going to be hard to knock off Google at this point without some disaster happening inside, Gemini 4 being horrible. But at Apple, by the way, Apple with no AI, even the fact that we're having this conversation is an absolute miracle. And it's going to be an interesting year for Apple, Daniel. You're going to see probably a complete revamp of the senior leadership team, or at least announcements of. You're going to see a lot of people moving back and forth. Tim Cook, right? It's pretty much the worst rumor ever that he is going to put up somebody to replace him.
It's the worst rumor because you don't think it's true?
No, it's the worst kept secret. There are no secrets.
Yeah, I mean, I think his time has come. I had an interesting conversation about that this week, that he came in because they'd had a Jobs in charge for so long that didn't put the rigor around operations. And then he came in and basically was able to capitalize on Jobs' ideas and turn it into a machine.
Yeah.
But now they haven't had a Jobs figure in a very long time, someone that's a big visionary there. And I think, it's maybe time to rotate that back and get back to the visionary side of that business. All right, I got one more. Like I said, there's not a lot here, Pat, but like one more I'd like to get your read on. What do you think? Like, a lot of people say where the bubble shows up is when earnings start to break down. A lot of companies are close their books at the end of the year.
Yeah.
We're going to have the big wave, Pat, the one where you and I end up on doing all the TV and going, running a million miles an hour in about 2 weeks, 3 weeks, talking about this quarter. And, I'm not asking you for estimates. People can look that crap up. Do you think there's any breakdown? Do you think we're going to do you see any path or any likelihood that tech is going to break down over these next couple of quarters? Or do you think we're going to be, sailing smooth coming out of Q1 this year?
Listen, infrastructure, I feel pretty good about. Software, to me, is another. And we're going to be talking about Martin Casado from Andreessen Horowitz to get a little bit of his opinion of that. But I still think it's an open throttle, Daniel, on enterprise SaaS. I don't have a good feeling for it. I mean, if there's one, probably a top 3 theme when I talk to CIOs, is their desire to reduce spend with enterprise SaaS. The question is, can they, and when could they do it, and what's the priority, right? Because right now they're at this impasse between, where do I put my investment dollar, right? Do I put them into horizontal and vertical agents, small language models, an on-prem version of agentic orchestrator, or do I pay the extra money to my enterprise software provider to do this? And a lot of spending is frozen, right? As well, like if you had to go invest a ton into infrastructure, your budget increased a little, and I think overall we saw about a 10% increase in AI budgets for 2025 at the CIO level, maybe even more. But that's the one thing that I think could make it crash.
Yeah, I think we're going to end up stable. I think that the growth is going to be there. I don't see earnings erosion coming this next few quarters. I think there's just too much demand.
Yeah.
I think there's too much demand. And if you go down to that enterprise level, I think that there's too much pressure from boards to deliver AI. So I'm not saying all earnings will be good. tech earnings will be good.
Yeah.
Because people are going to continue to turn to tech for the deflationary and scale and productivity and efficiencies that they expect to be able to get. And they're under pressure to implement AI. And whether or not we believe that, I think this is the year of enterprise AI and this is the year of agentic AI. And you and I both play with this stuff a lot. We're building stuff in our businesses itself, and we see how much more productive it can make us. So I think it'll be a good year. I'm very optimistic, and I'm kind of a permeable, so I get it. I don't tend to ever see, danger. But so far, Pat, I think our batting average is at least good enough to keep us in the major leagues.
So danger, let me ask you this though, danger overall or will there be pockets? I mean, in aggregate, I do think that, NVIDIA, could be the next, $5 trillion company or something. But where is that going to pull it from? So in aggregate, I agree. I just don't think it's going to be evenly spread. Was watching a bunch of shows this week about people wanting to load balance on Mag 7 or the Suite 8 or whatever we're calling it at this point. I just don't think it's going to be uniform.
No, it never really is, though. I do think the big companies are your reliables. We've had multiple years in a row of very strong QQQ, the NASDAQ growth, as well as S&P growth. There does tend to be down years at some point. So a down year does need to happen somewhere. This year's gotten off to a fast start. It's been up straight away. Policy's been favorable. The Venezuela news was favorable. Interest rates potentially coming down without huge recession fears, and the jobs numbers have been favorable. But this is we are in the middle of a Trump presidency, and that he can say whatever he wants, Pat, but I don't think he wakes up in the morning and doesn't look at the stock market. I'm pretty sure every day he's judging his performance against the market's performance. They're trying to create policy for crypto that's favorable, policy for AI that's favorable. You got Genesis mission, you've got regulatory red tape being taken out of the picture. I'm still very optimistic. But listen, what goes up must come down at some point. So we're certainly not saying it's a shoe-in. But here's the kind of recommendation I have for everybody out there before we close up the show is each week, ask Patrick if he's put money into the market. If he says yes, that could be a sell cue. That could be a sell signal. Because Pat will wait until just when the market tops, and that's when he loves to come in. I'm kidding. I love you, man.
No. Factually, you're absolutely correct. I mean, I sat on the sidelines, I put a ton of money in, and it dropped like 10%.
But you waited like a long time. Like you waited like till it had really gotten cooking, and you were like the guy that shows up at the craps table when it's been like a heater and everybody's just cheering and celebrating. And you stood there and you kind of watched it and you're looking over, and then everyone's cheering and the money's all pushed into the middle, and you just come in with a big wad of cash, throw it down on all in on the pass line, crap 7 out, first roll, and then everybody just walks away from the table together. Oh man!
Don't be me.
But in fairness,
this is why we don't even have to do a disclaimer anymore for this Bulls and Bears show. Because quite frankly, you do what I do, you're going to lose money. Okay.
Yeah, absolutely. And by the way, Pat, you make some other very good investments. So we don't talk about those on the show, but you've nailed some others very, very, very much. All right, there you have it, everyone. That is our Bulls and Bears. What a week in the markets. Pat, there is always so much to discuss, but hey, let's go off the record. I know we don't do these as often as we probably like, but when we have the opportunity to bring someone in that can really change the trajectory of the conversation here, Pat, or just someone that's got really interesting ideas and things to talk about, I know we love to do that. And we got one today that you met when you were doing your professional modeling and hosting. That was fun. It was really fun for me to sit there and watch you because I saw you working and sweating at GTC for like 2 days. Let's have you introduce our guest, which I'm super excited to have here today on the pod.
Yeah, it's great. So I'm proud to introduce here Martin Casado, general partner at A16Z, joining us today. Martin, it's great to see you.
Great to be here. Thanks so much for the invite.
Yeah, the lights aren't as hot, but the audience is actually bigger than the in-person audience that we had in Washington, D.C. for GTC. I really appreciated it. But hey, why don't we start off just to make sure we know who we're talking to? We know you're famous, but for those who don't know who you are, what do you do, and what does your portfolio, what do you focus on?
Yeah, so I'm a general partner in Andreessen Horowitz. I run the infrastructure fund. So it's actually we just announced today another fundraise. So we just raised $1.6 billion.
Congrats on that.
Very cool.
As of yesterday, if you would have asked me yesterday, I would have said 1.25, which was the previous fund. So the infrastructure fund. So our definition of infrastructure, this is computer science infrastructure. This is anything with a technical buyer. So think compute, network, storage, databases, of course, any of the low-level AI stuff, dev tools, that sort of thing, security. And so I run the team. I've been here for 10 years, and then prior to that, I was actually portfolio founder for A16Z.
No, that's wonderful. And isn't it funny how infrastructure was pretty much left for dead about 5 years ago? And the meme of hardware was hardware is an undifferentiated commodity. And look at us now. And I know infrastructure spans not just hardware, but also software.
Yeah, for sure. So listen, it's been an evolving tale. Hardware has historically actually been pretty boring, like networking, silicon. Now, software infrastructure, especially in data, has been pretty exciting. Think like Snowflake or Databricks, and so there has been a lot of exciting, GitHub. But AI has blown everything up. I don't remember the last time you had a lot of excitement around, a silicon chip, and NVIDIA just bought Grok or didn't buy Grok. They hired the Grok team.
Exactly.
We're seeing networking companies get funded again because AI requires new networking fabrics, and so times are very exciting again. Kind of early internet-esque.
And Martin.
Yeah.
By the way, just a little props to Pat and maybe myself, but both Pat and I actually did advised Grok, and we decided when we did this back in 21, 22, we decided to take stock from them instead of cash. So we're not like VCs and cool, quite like, we're not the cool kids, but we actually saw what was going on. Because Pat and I laughed, like in 2019, we would make this joke, silicon will eat the world in the next decade. We kept saying silicon will eat the world, semiconductors will eat the world. And we had journalists that said, don't write any more op-eds about chips, or we aren't going to cover chips.
Exactly.
At all. Yeah. Just 5 years ago, they were like, we don't even want to hear about it.
Yeah. It just turns out every technical epoch requires you to redo the entire stack. We actually saw this even with 5G. A lot of the Intel processors, like the Xeon, was actually used for 5G. We saw this with the data center. This is when you saw network revolution. So I worked in software-defined networking. That was kind of my focus. We redid the network. You saw this, of course, with the internet, which gave rise to Cisco and Juniper. So every time you have a technical epoch, you have to redo everything. And we forget that every time. So when you get to the end of the last epoch, we're like, oh, hardware's dead or whatever. And then the next wave comes and we've got to kind of get back to building the stack.
So I have to ask you, just because, everything you're saying here, I think I've seen you speak about this a bit, but are we in this AI bubble here, Martin?
Well, bubble's a tough. I don't think people even have a common definition of a bubble. Here's what I will say. From a productivity standpoint, demand is real. You have real users paying real money, getting real value, and that's incredibly clear. The data couldn't be more clear. So is there like a demand bubble, meaning we're assuming a demand will come? Do we have a supply overhang where we're building out hoping it'll come? No, the answer is absolutely not. We do not have a supply overhang. We have a supply underhang. The demand is very real. Now, speculatively, if you look on a deal-by-deal basis, sure, some deals are overvalued, but some deals are undervalued. So what I've learned in 10 years of investing, 30 years in tech, is that markets are actually very rational in the long term and broadly, but it's uneven.
Right.
So depending on how you look at it and how you squint, you're going to see things that seem overvalued and things seem undervalued. But I would say if you take it all in, my true belief is it's all undervalued in the long term. Right? This stuff is so disruptive. Demand is so real. It's monetizing so well. It's driving so much build out that we should all be incredibly excited for the future.
I'm just going to give this guy a high five.
Yeah, I mean,
because
Daniel and I are absolutely in there, and Daniel and I do a lot of broadcasts. And that's literally the only question we got for months. Daniel, what are your thoughts on that? I know they're very much aligned.
I think I did my 50th TV segment this week where I got asked the question, are we in an AI bubble? And so I think, I'm so tired of answering it. My comms guy said to me, you can't laugh at them when they ask you this because you make it look like they're asking a stupid question.
I feel the same way.
I know, but I just keep saying, look, we're constrained in every part of the supply chain right now. We have so much more demand than supply. Now there's a monetization question that hasn't been answered yet about the size of the TAM beyond subscriptions to LLMs. We'll get into enterprise right now because maybe there's a perfect segue here for you, Martine. The AI disruption of software. So right now, every SaaS company is adding agents. But at the same time, I've got 5 terminals of Claude Code open on my desk, and I can't program for crap. I'm not a programmer, but I am building stuff and playing inside of IDEs now and actually seeing what can be done. And we're building our own applications that can do things that our CRM used to do and our ERP did, and that enables project management. I mean, is software maybe the actual biggest risk here? Is that where the real disruption is happening? Is now that enterprises can sort of build anything really quickly with a few smart people? Is that maybe where we're going to see the bubble pop?
Yeah, so it's a very timely conversation. So we actually, as a firm, and my team in particular, did a deep dive on this in the last week. And so we actually have a lot of data. Let me just predicate this entire thing by saying it's very early.
Yeah.
And so a lot of what I'm going to say is purely speculative, but I do think that, we are a couple of years in, and so you can say a few things. So let me just say a few things on this. So the first one is it's very clear that coding is pretty much dead, but engineering is very much not. And so you can clearly say the floor has been lowered, so everybody becomes a developer. Yeah. There's almost no indication that the ceiling has also been lowered. In fact, the companies that are the most aggressively using AI are also hiring the most. And so the question is how do you reconcile these things, right? There are many things that even the best, version of AI coding can't solve, right? It's not very good at solving large, complex, stateful software code bases. It doesn't do anything with operations. Let's say, these days actually writing software is running software because it's all SaaS. The operations is not, it's not a solved problem because we haven't closed that control of it, watching what it does and then refining based on what it does. And if you actually look dollar weighted, the majority of dollars that are coming in on AI coding are professional coders, not casual coders.
That's right.
And so my belief is this is widening the aperture of the people that can code, which is going to require more code, which means more operations. And so the tent gets a lot bigger. I think the ceiling actually goes up. It doesn't come down because now the problems become much harder. You're going to have professional developers and engineers, and they're going to be, put to work. And then you're going to have a bunch of new coders that are coming in. There's a separate question, which is what does this do for SaaS? I just want to submit something before the next question, which is I've been investing in infrastructure and enterprise for 10 years. I will tell you, SaaS has never been a technology problem, ever. Yeah. It's just not hard. If you build a SaaS app, it's not hard. It's never been hard, right? And so the question is why do people buy SaaS? And the answer is you're buying a business process, right? It's a business process that's been understood by another company that tells you how to run your business. It's never been about the technology or the software. So I don't think it changes that dynamic much either.
Yeah, it's really interesting you brought that up. I was sitting in Google Cloud Next probably 2.5 years ago, and they put up a slide, agents for marketing, agents for finance, and I was aligning enterprise SaaS companies with these down the line, marketing, right? Human resources, and you could see the leaders in these businesses. And what's interesting is we have seen, at least from a market's perspective, I know you deal with a different market, but the public markets, the valuations are not doing well, probably with the exception of folks like ServiceNow. You've seen, folks like Salesforce and Workday and folks like that a decline here. But talk me through your thesis on, again, you'll never have the perfect data, right? You have to have your data management in place, but I do think AI will help with that. So you have a data fabric that's accessible by the enterprise, and these agents can hit that data fabric with the right security, the right access. Talk to me about your thesis of how this rolls out. We've seen some public battles between, Mark Benioff and Satya Nadella, right, that seem to go on for a year. So there is tension in the system for sure. And I do a lot of CIO roundtables, and they're literally telling me we are finding a way to get off of this software vendor. And we are.
Yeah. So listen, let me just provide kind of maybe like the historical sober view of this, right? So why are valuations and growth lower from traditional companies? It's because we're seeing the largest movement in budget we've seen since the internet. And when budget moves, it goes to new places. Are we seeing mass replacements of traditional software? No, we're not, right? And so, like historically, software tends to get, it's not zero sum. It tends to get layered, or budget will move, or it tends to slow down, but it doesn't tend to get replaced. Now, why would you start replacing something like a system of record? Well, the answer is it doesn't evolve with the new technology. Meaning there were a number of companies that didn't make the internet transition, and they could have, they just decided not to. So like we as consumers are going to evolve our opinion on what it means to interact with software. Like when I interact with Salesforce, for example, I'm going to want to call it up and talk to it. I'm going to want to have an LLM, but this is a consumption layer change. It's not a fundamental change. The business process is still there. The guarantees are still there. So Salesforce 100% has the opportunity to evolve the consumption layer to be what the expectations of the user are. So I don't think there's something fundamental end to end that's going to disrupt all of SaaS. That said, it's up to the SaaS providers to evolve to meet these moving expectations and this moving budget. So again, I use the internet as my anchor example when thinking through what's going to happen.
Yeah, I think that's really interesting, though, too. I think what you said is the most prescient, which is the experience has to change. And the reason that I think a lot of people, and I can say this as business owners, Pat, you share this probably sentiment with me, is these systems of records are supposed to help you run your business, but they're actually not that easy to use. How many people you have to hire to be like, oh, I want to report on last year's business versus this year's business with this cut and this slice and this angle. And you need like a special person to like come sit at your desk with you, or they can, thanks to SaaS, they can do it in another desk. But the point is, and drum up a report. When in reality, what we can do with ChatGPT or with Anthropic now is we just ask it a question, the same way I'd ask you a question. And if it can actually go through the APIs and through the traps and find the data, it will spit out. And you can say, I want it in a pie chart.
Yeah.
And you tell it, oh, I want it in a bar chart, or hey, I want it in a narrative that sounds like Eric Clapton singing, Tears in Heaven. And it can do that for you. And
right. But let me just provide the other side of it. So I agree with everything you're saying. But let's look at the internet, right? So what did the internet provide? It provided me the ability to like connect to software from my house, for example. So it provided this fluidity with consumption with access. What does AI do? It does the same thing. Like I can talk to it, I can use natural languages, but you still have all of the compliance, you still have all of the integrations, there's formal reporting things. There's also the business process on top. I still need to do pipeline reviews. I still need to do roll-ups. Like structured data is not going away, and we structure it to limit complexity. And the complexity is driven by the operations. It's not driven by the software. So I think the right way to view this is there's a reason that there is this complexity in the software. It's because we have complex business processes. We've got complex environments that they sit in. We've got a complex regulatory framework. And so you're going to always have that structured data, but it frees the individual from having a new consumption layer to work with. And so the right thing, in my opinion, for these SaaS vendors to do is to evolve with the evolving expectations of the users. But that doesn't mean it obviates all of this work of having to integrate into a complex operational world.
Yeah, I just keep saying that when you have less total human users and you have more agents, they all probably need to refactor their business models to some type of consumption based on tokens and actions, and not so much based on seats?
That's a huge topic. And so, you both probably remember the move from perpetual license on-prem to recurring. I mean, that gave rise to companies, killed companies. It was one of the most disruptive things. Not all companies are even there yet. There's still companies today that are talking about this move. Now we're seeing another pricing change, which is from recurring to consumption basis. And that's going to be a whole massive disruption at the same level of that. And we're seeing that right now. Absolutely.
Yeah. So Martin, I want to flip back to infrastructure. I think you talked about an infrastructure inversion driven by AI and cloud. Is there a contrarian view that you have on enterprise infrastructure that the market hasn't fully internalized yet?
I mean, I guess my contrarian view is like it really hasn't had an impact in the enterprise yet.
Listen, 100%.
That's all on the come. I really think it's all on the come. I mean, there's very open questions. Like, for example, I'll tell you, like, one open question is what's going to happen to central buyers and platform teams and IT teams if agents are making the decisions, right? So let's say I'm a developer right now. So let's say pre-AI, if I'm a developer and I want to use a database, the IT team provides a set of infrastructure, a set of docs. I get onboarded and I know about them, and I make these technical decisions that are in line with the policies of the organization, right? Today, so I code every night and I AI code every night. It's the most fun thing ever. And by the way, the fact that you're coding just shows that this TAM is expanding. We're all coding now, and we didn't code before. So who is making a technical decision? Like if you're using Cursor or if you're using Cloud Code, what's making the technical decision of infrastructure to use? The AI is making that decision. And so, infrastructure is a multi-trillion-dollar business. And you've removed the human by and large from actually making the decision of what to use. We have no idea what that means internally. We have no idea what that means to the industry. And so I think a lot of the real disruptions from AI are still on the come. And we're just seeing very, very early glimpses of that through secular adoption by individual users.
So we've got only a minute or two, and I really appreciate, Pat, we really appreciate. What about you're the infra guy, and Pat kind of shifted us back here a little bit, but I mean, I just keep hearing everything is constrained. This is 26 is going to be the year of memory. We're inking nuclear deals for tech that doesn't even technically work yet in most cases because we're going to need to energize these racks. We got 2-ton racks, now being delivered.
At least one-upped it with a 2.6 rack, right?
I mean, Jensen's breaking physics laws, but like, what is your sort of read on compute, capital efficiency, all these different constraints, and like, how is this going to reshape the kind of the way we're going to scale this whole thing going forward?
There's only one constraint, and that's regulatory. What's very interesting? So do you guys hear about data centers in space?
Oh, yeah, absolutely.
It's a ridiculous concept. Like you have to go all the way to space. It's so stupid. So it turns out it's not stupid for exactly one reason. Can you guess why that is?
Yeah, regulation. Less
no rules.
So it's 100%. By the way, the numbers pencil out just because of regulation. It is so onerous to break ground in the United States. It makes more sense to send the data center to space. And so, listen, we are a very, very innovative species. We're a very mature industry. If we need capacity on bandwidth, on chips, we know how to do it. The issue is getting the bureaucracy out of the way to do it.
That makes sense.
That was too fast, though. He didn't even give me a few good sound bites about the fact that we can't build enough. Because your point, though, in the end is like we need to build more fabs. That takes time. You need to build more data center. That takes time. You need to
but the issue really is that they can't. Listen, if you went to Google today and you're like, you can break ground tomorrow, we would have the capacity we need. We actually have the latent capacity as an industry to do this. The take time is purely a bureaucratic and regulatory morass.
Power is very much a challenge. Whether it's SNR fusion that doesn't work yet at scale, Daniel, you're involved in a couple projects as well.
Well, I advised Trump on the TAE deal, but the thing I was going to say is I heard you can open daycares very quickly. So if we can't do the data center thing, guys, there's other ways to make money.
Certainly can get them funded very quickly.
Exactly.
Well, you actually don't need to open them to make money, and that's the beauty. So, Martine, I just want to say thanks. This is a lot of fun.
Absolutely.
Our off-the-record segment, unfortunately, isn't as long as this conversation really needed to be, because I could have drilled in quite a bit longer. So I'll send that note back to the producer that we got to figure out ways for these longer forms to let us keep going. But a lot of fun to chat to you. And by the way, that was the best answer on the regulatory, best answer I've heard on something in a long time, because I've just been thinking about it too much, because I'm thinking about, like, I'm not actually kind of going back with the right messages. Like, guys, if we just fix regulatory, you can fix everything else. Because
again, maybe we're rolling, maybe not. I'll tell this. I talk to these people all the time. Yeah. We have a full portfolio. I am telling you, the long pole by far, by an order of magnitude, is breaking ground. Yeah. That's it. We know how to solve power. We know how to build foundries. We know how to do these things. It's not a technical issue. And the people that are sitting on the top of these big data centers know that. And by the way, is China smarter than us? No. Do they have more production capacity than us? No. Are they ahead of us? Yes. Why? Because it's like full-throated endorsement of building out, and this is what we need to do too.
Was that like a coal-fired plant a week there? Is like what I've heard, or something like that that's going up?
Unbelievable.
Well, the other thing is too,
we know how to do this stuff. We know how to aggregate capacity. We just need to do it.
Yeah, I started working with the Chinese in the mid '90s, and they would show me schematics of where a metal bending factory would be, and it'd be a forest, and there's no roads. And then a week later, forest has been cleared, people have been moved, and roads were put in. And then a week later, power came in. I mean, it was absolutely unbelievable. So yeah, Martina, I really appreciate you coming on the show. Would love to keep in touch as we move forward. I don't know if you're sending a contingent to Davos, but a lot of your compatriots are actually
I'll be going the other way.
No, I hear you. It's funny. A lot of your peers are headed there for the first time in years. And Daniel and I, for the first, we just started going last year when it looked like we were actually going to talk about technology. And it's
the word to them, brother.
I was thinking about your regulation commentary, but quite frankly, the biggest discussion there last year was we over-regulated ourselves, and these were people from the EU, and DJT is going to be there, and Vance and folks.
I mean, did you just see like Italy just fined Cloudflare $17 million for like something that they basically couldn't fix, and Matt Prince is going to I mean, I just feel like we're in this crazy thing where we're extracting, like, we're slowing down companies.
Taxation, and this is what this is.
Well, that's the EU's fundraising mechanism is
basically regulatory
regulating U.S. companies. And by the way, if you want to go slow, you want to feel like we're going fast, just look at what Europe does, and you'll realize that we're going really fast here in the United States. Because
every time I feel bad about the United States, I just think about the EU, and I feel better.
And that's there. So China makes us feel slow, and the EU makes us feel fast, and we're going to land somewhere in between. That was, by the way, Pat, my worst ever exit of an interview. Like, we exited, and then we did 5 more minutes, but it was totally worth it, Martine. Thank you so much for chatting with us. Let's have you back on the show again soon.
Gentlemen.
And there you have it, everyone. That is off the record. All right, man, I got to wrap. I got to go. I got meetings and stuff to be at, Pat. Unfortunately, for all of you that don't care about that, Pat and I love doing this. We wish we could do it more, spend more time with you. Thanks so much for tuning into the show. We appreciate you being part of our 2026 6-5. It's going to be the best year ever.
Yes, it is.
See you all later.